Welcome back to Fast Market here on the Schwab Network. Before we take a look at Meta Platforms, let's now take a check on the broad market equity action. The S&P 500 holding on to a gain right now. It is better by 0.75%, just about there. Blue chips better by about 0.25%. NASDAQ 100 again still holding on as the leader, up more than 1%. Small caps under some pressure still, but not by much, down by just a little over 0.1%. And joining me once again, you've got your Fast Market co-host Kevin Hinks. He's over at the CBOE. We've got you covered from exchange to exchange. We also want to bring in now George Tsilis, senior markets correspondent here on the Schwab Network. All right, George. So we've got Mag 7 in the hot seat all week this week. Let's talk Meta Platforms. It is catching a bid today ahead of its earnings. Hit an all-time high. What's the street looking to hear from Meta, George?
Well, I think obviously there's going to be a lot of ears open to what's going on with CapEx, because we saw what happened with NVIDIA yesterday and some of the other hardware application names like Broadcom, Micron. I'm sure you talked about it quite a bit, but if you look at the other aspects of the software space, and of course the communications application names like Meta Platforms, Apple, for instance, these stocks are actually catching a bid in the midst of this market turmoil. So I think, if we consider what's happening with artificial intelligence, these models are becoming more commoditized, and therefore information is going to be disseminated quicker and cheaper. And I think that's actually going to benefit companies like Apple, which is not essentially a company that has a lot of endogenous investments in AI. In other words, they're not creating their own systems. I think Meta Platforms is going to benefit because advertisers are going to find better opportunities to better target display ads. And this stock continues to move to the upside. So, there's in the Mag 7 or Mag 8, however you want to look at it, we are starting to see divergence occur, particularly in Meta and Apple. And if you consider, what's happening from an ad monetization standpoint, from the standpoint of just the business itself, they continue to accelerate their earnings guidance going forward. Now, if you look at the quarter, they're expected to earn about $6.73. That's 26% higher than last year for the same quarter, where they generated as a business around $5.33. And sales are expected to be robust as well. We're talking mid 15% range at $47 billion compared to the same quarter last year. So overall, you are expecting to see close to 30% earnings growth on 15% sales growth. And the key ingredient, obviously, I think, is going to be not necessarily how much Meta's spending on their own business to grow their data centers and, of course, take a little bit more control using their Llama 4 architecture and enterprise AI. But I think a lot of folks are going to be watching to see whether or not there's a cutback in CapEx from Meta Platforms, which may end up creating more of a market spillover effect to some of the bigger players out there like NVIDIA and even Broadcom.
George, in a global sell-off of anything related to AI, Meta Platforms rallied yesterday, and it's up again today.
Yep.
Why? Because a lot of their AI spending, remember, they just announced $65 billion in CapEx spending this year. Two things. They're spending it in the Meta Ads division, which might make that business even more efficient, which brings in all their revenue. And the DeepSeek issue may actually make their CapEx cheaper and more efficient, and they may be able to do the spending at lower levels. So, the problems that came from the DeepSeek news yesterday seem to be a tailwind for Meta Platforms, George.
I think so. I think, what's happening, just if you look at the language of the market, particularly looking at the distribution and accumulation that's happening between the mega cap names. Obviously, there's distribution happening in NVIDIA and Broadcom, and there's a lot of money moving into Apple and Meta. And I think it comes down to, obviously, the yield or return on investment for AI. The faster we move AI forward, the cheaper it becomes. That's going to be better commoditized spending for companies like Meta Platforms and even Apple, which again is serving as an ecosystem for many different AI platforms, and that's a great strategy that they've taken on. I think the market is rewarding them. So absent that, I think if you look at the CapEx spending Meta is doing, it's really based upon their core advertising infrastructure. And overall, if you look at the increase in CapEx, 65 billion, these are estimates on the high end, that's 25 billion more than last year. That's over 10% of their sales, just the increase alone, if you annualize their sales at around $200 billion. So obviously there's a lot of spending going on, but there's also there are companies that are being rewarded for their spending. And right now we're seeing a distribution into those names like Meta Platforms and Apple versus, again, the companies that are going to essentially face some challenges with more efficiencies behind AI, including NVIDIA and Broadcom.
Yeah, that's a great point, George, especially how they're being rewarded. And it reminds me of the last quarter where you saw differentiation into how the street responded to the different members of the Mag 7. And it is interesting to see that Meta's being rewarded while it is spending. All right, George Tsilis, a senior markets correspondent, thanks a ton for the setup for Meta's earnings.